Welcome, everybody, to another episode of Tech Guys Who Invest podcast. This week, in this episode, we have Fred Moskowitz to talk about cash flow and one of my favorites, note investing. So welcome, Fred.
Thank you, Kevin. Thank you, Adam. It's my pleasure to be on your program today.
Yeah, Fred, we're so happy to have you on the show. So we'd like to just get right into it and ask you, what are the ways note investors can create cash flow?
Well, the ways note investors can create cash flow. There's several ways. It really just depends on your strategy, as well as how much time do you want to spend in the business, right? There's three basic ways. The first way, which is I would say most commonly known, is that if you're a property owner and you've had the property for a long time, you can sell the property with owner financing. And there's some really nice benefits to do that. But you're effectively originating your own note through carrying back a mortgage, creating financing for the buyer. And this allows you as a property owner to no longer own the property and still receive the benefits of cash flow from that asset on an ongoing basis. And there are also some tax benefits as well that can get a little complex. It's definitely a conversation to have with your CPA or your tax advisor about that. But that's the first way, right? And the second way is to buy an existing note on the secondary market, something I focus on heavily in my business. We buy a lot of notes that have been originated already, and you're buying them from on the secondary market, and the note's already in place. You can look at the various parameters of the note and do a risk assessment and make sure it falls into where your comfort level is when you're buying it. And the third way to get into note investing is by investing in a note fund. And there are some advantages to this as well. This is an avenue I recommend for people that maybe have their own career. They're working as a professional. You may be a successful engineer or an attorney or doctor, any profession, right? You might be a business owner, and you're focusing your time on operating your business or working in your career. And so through a note fund, you're able to invest passively. And the fund operator, the fund manager, they take care of running that note business. They take care of sourcing notes, buying them, managing them on an ongoing basis, doing the analysis, risk management, any mitigation, and they pay out a passive return to the investors. So those are the three main ways. So really you have to think about what's your strategy, how much time you want to devote, whether you want to be actively involved in the business or you want to passively benefit from the asset class.
Yeah, very nice. And I think we have both type of listeners who listen to the show. So it's great to hear you kind of break it down that way, Fred. I have a quick follow-up. You said several pretty interesting things in there. I wouldn't mind unpacking, but one that kind of stood out to me is you talked about the second way of buying these notes on the secondary market.
Yes.
And what if someone is pretty new to this, but they're interested in maybe a little bit more of an active pursuit there? What might some of those ways look like? Like, how would someone find this secondary market? Because it's not something that's as well known as some, common investments that people may be aware of.
This is true. It's not something widely known, but I'll just tell you a little story, and I'm sure a lot of your listeners can relate to this, right? Have you ever taken out a mortgage on a property you own, whether you were buying it or refinancing it? And what happens is within 2, 3, 6 months after closing on that loan, you get a letter from the lender saying, "Dear Mr. Homeowner, please be advised that your loan is being sold. The new lender is such and such company, and starting next month, you can send your payments to them. Don't worry, none of the terms and conditions of your loan will change in any way, right?
Yeah.
And this happens all the time, right?
Mm-hmm.
Some originators, they sell and they'll disclose they sell 90 to 100% of their loans almost immediately. So that's what happens at the institutional level, and um, just about every one of us has experienced that as a borrower on a note.
Right.
So with notes though, whether it's an owner financed originated note or a bank originated note, they are bought and sold on the secondary market every single day. This exists, and you can see this. You can go on the FDIC, Fannie and Freddie Mac website, where they show it at huge levels all the loans that are being sold that quarter and what the bidding process was like and everything. But down to individual investors, right? These loans get sold. They get sold to hedge funds out on Wall Street. They get split up, repackaged. There's all sorts of manipulation. Mortgage-backed securities are created or broken down or collapsed, as it's called, where notes may be notes that fall out of a specific rating or specific category. They get separated off and sold. Now, for an individual investor looking to buy notes, right, the best ways to find them is really through relationships. In note investing, the note investing industry, relationships are key, because you have to establish yourself as a credible buyer. And I can get into more detail on that. But you establish yourself as a buyer and you build relationships with sellers of notes. It might be a hedge fund or a note fund. They'll sell notes to individual investors. Maybe it's on a one-off basis, or you're looking to buy 2, 5, 10, 20 notes at a time. And so that's what might be appropriate for you as a buyer, but it really is all about individual relationships. You need to go out to events and conferences in the note industry, meet people, shake their hand in person, back going when we can get back to being at events again in person. But it's so important because everything is relationship based. And if people don't know you, they're probably not going to do business with you. There is liability on the part of a note seller to who they're buying from. So they have to be very careful about who they're buying, who they're selling notes to. Now, for a buyer though, you want to meet other note investors, because note investors always are buying and selling notes. If a note holder needs to raise capital, they'll sell a note. Maybe they'll sell the whole note. Maybe they'll just sell a partial, which is part of a full payment stream. They'll do that to raise capital, and they'll sell at a discount in order to raise that capital. Notes are very liquid instruments, very liquid investments. What I've found that is, if someone wanted to sell a note and they have a good network, they can reach out to their network and within a couple of days have the note sold.
Wow.
That's crazy.
And just one additional thing, there are some online exchanges that are starting up. One that I'll mention, which seems quite good, is PaperStack. They've done a really nice job of making a portal where buyers and sellers come together. They're a neutral party to the transaction, but they help manage it. They help to make sure that everyone's credible and reputable. And that might be a great place to start for someone that wanted to take a look and see what notes might look like, what the pricing might look like, and different parameters like that.
Yeah. We actually had one of the co-founders of PaperStack on a previous episode, but yeah, I like PaperStack. I go on there, look at some notes. think about buying them as well. I love that it guides you through the process and you can interact with the seller. Whereas with the spreadsheet, it's almost just like, what do you want? Make a bid. You're not really talking at the rate that you can with paper stack. So I love that. Great mention. So when we talk about note investing, you mentioned note funds. What would you say the risks are? Like, let's say somebody says, all right, I want to be passive, and they want to look at note funds. What would you say the risks would be if they were to invest in a note fund?
That's a great question. I run and manage a note fund myself and have these conversations with potential investors all the time. But here's what I'll say: with a note fund, you, above anything else, you want to do your due diligence and manage your risk of the fund managers. Who are the principals? And what's their reputation in the industry, and what's their experience level? Like, before you do anything else, that's what you want to take a look at above anything. It's just like investing in any passive investment, maybe a real estate syndication, but you want to look at who's the operator, what's their reputation, what's their track record, right? And in the note industry, it's a small world. If there's a bad actor, word will get around really fast. So it's really just a matter of asking around. Maybe people won't publicly make remarks, but in private or on a one-on-one discussion, they'll be willing to tell you whether they've done business with someone. And this really applies to whether you're thinking about investing in a note fund or buying individual notes, right? Are you dealing with a reputable seller? But with a note fund, right, you want to look at the principles, do your due diligence on them, as well as what's the business model and strategy of that note fund, and make sure it's in alignment with your own goals and objectives and risk tolerance. Because there's different funds, they focus on different asset classes and have a different risk tolerance, different investment time horizon, and there's no right or wrong answer. The right answer is the one that matches with your own objectives and that you have a good alignment.
Excellent. Fred, we talk to our listeners a lot about investing for cash flow. And I was just curious what some of the most common cash flow mistakes note investors might make.
Wow. Well, some of the mistakes that I've seen really have to do around not doing homework up front. And what I mean by that is when you're doing your due diligence on a note, right? As I mentioned before, you want to look at the counterparties to the transaction, whether it's the principals of a note fund or your note seller. Who are you dealing with? What's their reputation, right? I've seen people get involved with some unsavory characters and they had no idea. And all it would have taken for them is to spend 10 minutes Googling a couple people's names and they would have seen some serious red flags. So that's so important. So I can't stress that enough. But also with cash flow investments, run the numbers. You have to run the numbers yourself. And what I mean by that, get comfortable with using a financial calculator. One of the most important tools in this business is learn how to use a financial calculator. And what you need to be good at are the 5 buttons on the top row of that calculator: NI, present value, payment, and future value. You want to know how to run those numbers. There's plenty of resources online, YouTube videos and classes you can take online to learn about that. And what you want to do is run the numbers on the note. If you're looking at a note you're going to buy, well, you're given the loan balance, you're given the payment amount. Well, you want to run on a financial calculator the current value of the loan balance. You know what the original amount was because it was stated in the note. And look at your amortization table. If you're in month 60 on that note, it'll tell you what the unpaid principal balance
Right.
should be. And does that match up? Right? It should. And if it doesn't for any reason, well, now you have to start asking some questions and digging into that, because you may uncover some interesting details that might not have been disclosed to you. Like, was there a prior default, or is the loan not current and the borrower's behind a couple payments? And it may be some of those things come up, and it's all fine, but were they disclosed to you in an upfront way? And are you okay with that? Right? It's not necessarily anything wrong, but you want to know ahead of time. You don't want to have surprises coming later after you've already bought the note and you're stuck with what you got.
Mm-hmm. I like that.
Yeah, it's great.
Now, speaking of that analysis, when we're looking at a note, how do you determine how much cash flow it will create for you? Is it simply just the principal and interest? That's all you get, or how does that normally work?
No, it's not all. And this is an important important detail with note investing. So with a note that's performing, you're buying it for cash flow. What you're doing is you're buying for yield. And what I mean by that is there's going to be a discount when the note is sold. It's being sold for less than the amount owed. Let's say maybe you have $100,000 note. The seller is going to sell it at a discount. They'll sell it for 90,000. And they're willing to do that because they rather have the cash today up front than spread out over time. Well, that $100,000 note, if we use the example of a 6% interest rate, and you're getting payments about $599 a month on a 30-year term. Well, if that note is sold at a discount to what's owed, so the $100,000 note might be sold for 90,000 or 85,000 or 80,000. Well, your rate of return, your yield is not 6%. It starts to go up to 7, 8, 9, 10% even, right? 11, 12%. If the discount is deep enough, it drives up the rate of return. So what you have to do when you're analyzing a note using your financial calculator is you're solving for the interest rate. You're not solving for the rate on the note. You're basically taking the number of payments left, you're taking your monthly payment amount and solving for a yield, a rate of return that you want. That's how you price a note. And it's going to give you the present value of the note, which is going to be less than a number less than the amount owed. So when you're negotiating to buy a note, you need to keep in mind that, okay, on this note, given that it's in a specific real estate market, which is strong or weak, and the position of the note, whether it's in first position or second position or some other junior position, what's the risk factors involved, that's going to make you adjust your rate of return you're looking for. And so that drives the discount. So when you're making an offer or bid on the note, that's how you go about it. You start with what rate of return do you want to earn for your capital, and then from there you can figure out the amount you're going to make an offer on.
Mm,
So,
like that.
Fred, for an active note investor, what's the due diligence process like for note investing? When you get a potential new note, you're looking at maybe buying a note from a seller. What just kind of at a high level, what type of due diligence should someone consider?
Well, due diligence, it really is a multiple step process. You start out by uh, looking at your counterparty on the transaction, the note seller. You're doing your due diligence on them. I can't stress that enough. You need to know who you're dealing with and make sure you have a reputable transaction. And as I said before, note investing is all about relationships, building relationships. And if you have a good transaction and you close smoothly and fund the transaction when you committed to, well, you're going to have a stronger relationship with that note seller, and in the future, buy another more notes from them, right? That's what you want. So you want to think about this from a long-term perspective. But getting back to due diligence, right? You want to run your own numbers using a financial calculator. Don't allow anyone to do it for you. I mean, that's fine. They'll provide that, but do it yourself. It helps you fine tune your own skills and get good at that. You want to crunch the numbers, push a pencil to the numbers yourself every time. Next, you want to look at the collateral of the note, right? The loan documents. Um, Make sure everything's been recorded properly. There's the note, the mortgage, or if you're in a Western state, it's called a deed of trust. There's the assignments. These are the documents that are recorded in the county courthouse that trace the transfer of that note from of the mortgage, the security instrument, from each owner to the subsequent seller. So it's kind of like a chain of title on a
Sure.
deed for a property, but this is related to the note or the deed of trust. And if you're not comfortable doing this, or maybe this is your first time, get some help, right? Get some help looking at the loan documents, at the collateral, either from a more experienced note investor, or any attorney can do this for you. It's well worth you paying for an hour of attorney time or an hour of paralegal time to review a note, loan documents, a collateral file review. Any attorney will do that for you. And if you're a note investor, you want to have a relationship with an attorney in the state where the property is located. Another thing they're going to help you with is talk to you about any jurisdictional nuances, like compliance, licensing requirements, anything like that that are state specific. So you want to get clear on that, just so you're aware and you know what you need to do. Some states require you to make sure that you have a license. Some states require a license. Other states require that the loan is serviced by a licensed servicer. So you can place that loan with a licensed servicer, and then they take care of all that compliance details for you, which is a super valuable service. I actually always recommend you have all of your notes boarded with a loan servicer. There's so
Agreed.
many benefits to doing that. So that covers the collateral and the compliance, and run your numbers. You want to look at the payment history, right, on the note to make sure that everything's being paid on time. And if it wasn't, there may have been some hiccups in the past, but they've been resolved, and that's fine too. But you want to know about that. If you're
Hmm.
buying a loan that is 6 months behind, but it's being paid on time every month, it's just rolling behind, that's okay. But be aware of that, right? You don't want any surprises later on that you didn't know about.
Absolutely. Yeah, I agree with that 100%. And I like how you talking about the chain of title and things of that nature. And my perspective, when we're talking about relationships, finding a local real estate attorney, and then we'll get to COVID in a bit, but there are nuances to that, right? These moratoriums, you fall under that. not only from the federal perspective, but then going at the local perspective, how is that affecting you as note investors? That is where you bring in those types of experts. And I do love that about the note investing space, is building those relationships and saying, hey, expert, what do I need to know for this particular thing? And that's what you pay them for. That's their value. Fred, I
I,
wanted to ask you, what would you say to people who are hesitant to become note investors? I mean, I'm biased because I love notes, but I'd love to hear it from your perspective.
yeah, it's a great business. I I think it's so powerful, and I believe that everyone should consider it as an asset class to invest in a way that makes sense for your own individual situation, right? Whether it's passive or active, but notes are a great assets for owning in a retirement account. It's so powerful to combine the power and the high yield of note investing with the tax advantage benefits of a retirement account. Super powerful. So I always recommend that to people. As far as the risks, right? You can get you start out in low risk assets, low risk notes, and over time, maybe your comfort level will change and you'll be interested in looking at some higher yielding assets, and
Right.
that's fine. You can do well with every asset type as long as you know how to mitigate your risks, right, and diversify within the different notes and the categories of assets. But if you don't have a lot of time available, then you don't want to be buying notes that are riskier. You probably don't want to be buying individual notes. I would say a note fund might be more appropriate for that person. It just depends on your individual situation, but it's really about diversification. We hear about diversification all the time, and I used to be a computer engineer, my prior life, and I would laugh hearing about you would sit through the retirement plan, the 401k presentation, where they're talking about the importance of diversification and all this. Well, guess what? Diversification does not mean split up your 401k contribution between the six or so choices in your retirement plan, right? To me, diversification means I'm going to have a bucket of my capital for notes, and I'm going to have another bucket of capital for real estate, investing in commercial real estate deals, investing in apartment syndications. Maybe I'll have another bucket that's for self-storage syndications. Now that is true diversification, where you are getting into completely unrelated asset classes. It's so important. Um, I it burns me up when people talk about diversification and they have this um, really narrow view of what it is. And I always say take note of new opportunities, new horizons, because there's so much out there. At least learn about it and know that it exists, and then you can make an informed decision on whether it's right for you or not.
Yeah, I love what you're saying there. And I think listeners pay attention to that part in particular. It's so important because many people, especially a lot of high paid knowledge workers, are just kind of caught up in the system and don't quite realize it, just shoving your money into a 401k, mutual funds, and then thinking you're diversifying when you diversify across the assets in those types of funds is really not secure, uh, wise diversification. So love what you're saying there, Fred. So if somebody with a 9 to 5 wants to get started investing notes, I mean, I heard you talk about a fund. It sounds like maybe that's the place to start. Or do you have other ideas? Where would you recommend somebody get started if they have a 9 to 5? They like their job, they don't want to leave that, but they want to diversify, like we're talking about.
Yeah, to start out, I would say look at buying performing notes, right? Which are great. Note funds, an excellent option as well. If you can combine that with a retirement account, even better, because note investing generates tax liability. It does. So if you can combine that with the tax advantage power of self-directed accounts, it's super powerful. And whether it's an HSA, health savings account, or a Roth IRA, or anything like that, right? Get yourself a relationship with a good self-directed custodian that can provide you guidance and support for this strategy. And it's a great way to get started. And being passive, right? You're able to focus on producing your income, working at your job and your career, doing what you love, right? Doing what inspires you and what you're good at. But that's a great place to start. And I've seen this time and time again. People they start out by investing in a note fund, or they start out by buying some performing notes. And then over time, they find that they like the business and they get more and more active, more and more involved. And that's great. But it's not for everyone. Some people are very happy to just participate as a passive investor and let others utilize their expertise and their relationships to manage and grow that capital. I mean, that's what we do when any of us invest. You invest passively in a deal that someone else is operating, right?
Right.
I'm not an expert in self-storage. I'm not an expert in large multifamily properties, but I love investing in them. I love it. They're great assets. So I'll participate in those deals and benefit from the expertise of the operators, right? You find those best in class operators and they have a track record, you develop a relationship with them. It's very powerful.
Yeah, and we've had some previous guests on who were administrators of those self-directed IRAs. So for our listeners, if you haven't checked those episodes out, check them out. And when you're thinking about, well, what type of investment might I do with these? That's exactly what Fred's talking about here.
Yeah, Adam, it's interesting when you talk with the self-directed IRA custodians. Um, you have to remember that their fiduciary responsibility is to manage your account and keep it compliant with the IRS, with all the regulations. They're not allowed to give you any advice. They cannot bless an investment or recommend an investment. They can't give you tax advice. There's a lot of rules that they need to follow. So you can't go to them with an expectation that you're going to open your account and then they're going to say, here's 20 different things you can invest in and go ahead. It doesn't work like that. I want to stress the word self in self-directed accounts. Self is you. You are responsible for the performance of that account, for the due diligence on what you're investing in, and finding the investments, right? It's
Right.
going to allow you to invest in what you know and what you like, but it's still on you to make that happen, to make that
Absolutely.
account grow through your own efforts.
100% agreed. So I mentioned COVID earlier, and I'd love to kind of pick your brain as a note investing expert. How has COVID-19 impacted cash flow when it comes to the note investing space, either for you or for people you've heard about?
Yeah, that's been an interesting question. It does come up quite a lot in the conversations that I'm having with other investors. But in our note portfolio, in our fund, we've had very little in the way of hiccups, right? With notes, where we have had a couple of cases where borrowers got behind by a couple of payments, but It's very few, very few. Certainly, we're expecting a lot worse. And what happened is borrowers contacted the loan servicer. They said, "Hey, we've been impacted by COVID." They had a valid uh, and documentable situation that came up, and the direction that I always give to the loan servicers is we want to work with the borrowers, right? You want to work with people and people that have a valid hardship, and they'll straighten things out. People will get things together. And what has happened is someone, like for instance, there was a note we had. They got a couple of months behind on payments, and then after several months, the state they were in opened back up again. They were back to work again. They got their payments caught up. Right. This happens. So it's been pretty good from that perspective. Now, another interesting area is on the transaction side. Um, this year in 2020, this has happened multiple times, actually. And this goes back to the relationships importance that I mentioned earlier. Uh, I got several calls from hedge funds, from note sellers saying, "Hey, Fred, we had this transaction that the buyer backed out on. They signed a contract to close. When it came time to fund the transaction, they backed out. Maybe they got cold feet because of COVID. Who knows what happened? But the important thing is the call came to me. Do you want to step in and fund this transaction and close on it?" And I looked at it. I said, "Hey, apps, thanks for the call. I'm going to take a look at this." And it was a great opportunity. It was a great deal that I was able to just step in and execute on. So that happened multiple times this year in 2020, and that's been fantastic. So that goes back to the importance of those relationships, right? If you have a relationship with a note seller that gets to the point where they call you when they need you, that is fantastic. That's awesome. So powerful. You want to build that up over time, because that will open up opportunities for you when someone else can't close or someone else backed out of a transaction. Something happened, something went wrong that was unplanned, and you can step in and perform. That's going to put you in such a great position. So that's been one of the interesting and unexpected consequences that I've seen related to COVID this year.
Nice. Yeah, that's fantastic. Okay, Fred. So we wouldn't be the tech guys who invest if we didn't ask you a tech question. And I think it's pretty cool that you're a tech guy who invests too. As a former engineer, you're one of us. So how do you think technology could improve the investing space, the note investing space in particular, or maybe how could it make your life easier as a note investor? Just it doesn't necessarily have to be something that exists today. It could be an idea you have, or just it'll be interesting to hear, especially a former engineer's thoughts on how technology might be able to improve the note investing space.
Yeah, that's a great question, Adam, and such a juicy one because technology is everywhere. And I'll share with you some of the great examples of that. Certainly on the due diligence side, I've seen other note investors put together these elaborate spreadsheets and calculations and projections to run numbers, run due diligence. There's all these great commercially available tools like Data Tree, Realty Track that allow you from the comfort of your office on the computer to do analysis, get comfortable with the real estate market, specific to notes that you're looking at. So you have all of these great tools. Research companies like LexisNexis and TransUnion offer all kind of research products that you can look at that will help you with doing due diligence, doing analysis on borrowers on notes, looking at all kinds of parameters, as well as real estate market, access to public records. So you can you can essentially now uh, do what a title searcher used to have to go into the county courthouse to do in person. You can do it all online in a lot of counties across America now, which is becoming more and more available. So from the research perspective, it's fantastic. Companies like Paperstack and Watermark that offer these marketplace um, websites and forums for transaction of notes, where you can look at notes, you can get some numbers, run some scenarios, get connected with buyers and sellers. These are all benefits of technology. And I'll share with you something that anyone that's serious about note investing, you want to look into this, right? It's the financial calculator. Here is like the classic
Nice.
Cadillac of financial calculators, the HP 12C, right? This is the old
Nice.
school calculator. Well, now with technology, and I'm just going to pull this up, I can install on my smartphone an app called 10BII Financial Calculator. It costs like $5 or $6, right? And so now you have this on your smartphone all the time.
Nice.
It's ready to go for $6, the best $6 you could spend.
Yeah, and having being a parent who had to buy a financial calculator for my daughters in high school, I can tell you $5 versus like 110 is a great deal.
Yeah. Yeah, it is. And you always have it with you wherever you are. So you might be on the phone talking with a note seller, and then you could sit there on your phone and run some quick numbers um, and see if you're in the ballpark, which is fantastic.
Yeah, it's awesome.
Awesome. You know what, Fred? This
Benefits
has
of
been
technology.
a fantastic conversation. I love the 10BI. I have it on my iPhone. I have it on my computer. So if I come across a note, I got to run those numbers super fast. But we wanted to close things out and ask you one last thing. Where can people find you if they want to get in touch with you and learn about how to create cash flow through notes?
Oh, thank you. Thank you. There's a couple ways. So you can connect with me by visiting my website, which is fredmoskowitz.com. And another way is to text the word note to the number 47177, and you can follow the prompts, and that'll allow you to sign up for my newsletter that I have about investing, as well as get notified. I have an upcoming book that will be coming out at the end of 2020. So it's a note investment book all about analysis, doing due diligence, about performing notes. So I invite anyone that's interested to check that out. But I love speaking with other investors and learning about what they do, connecting with investors, talking about note investing. Like I said, everything's about relationships, and establishing relationships is something we have to do on an ongoing basis. So reach out and connect with me. Thank you so much.
Yeah, thanks for coming on, Fred. It's been great.